Hi everyone. Today is Thursday, it's not March at all. May the 1st. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We've got 4 days of megaphones, not a daily megaphone pattern, although that's exactly what this looks like now on a daily. It does look like a megaphone. So, pardon for being a little late this morning, just trying to do too many things and got very distracted. Okay, so what are we staring down? Let's take a look at the E-mini S&P 500. We can see that here's our opening range, pretty wide, huge expansion event. Now, some of us that are Fibonacci purists, I'm not sure I am one of those, we might take the large wave that got moved yesterday and find the 50% target, and wouldn't you know it, it's right there at an old region, 55, 94, 25 on a fade. Actually, that's the 50% of this gigantic range from the low of 54.50 upside to 55, 56.60, 65. All right, dips are certainly buy zones. Right? This is a bullish environment. Same thing. Do we have another daily megaphone in play? Potentially. That's what the traders seem to like doing. Stretch people, run the stops, turn around, and move back upwards. If we just think about things in terms of trend, we will be just fine. Okay? And if you want to take the long off of 56.39.50, you can. The stop is all the way down here at 56.25 and then 56.16. My thought would be if I took that, then I would actually make this low wick my stop, right? And just get out. So that would be 5.35. It's still a pretty big range. Somebody sent me their trading notes for the day, and they've got a 5-point stop on the ES. And the ATR is, 7 on these hourly formations. So that stop is way too tight. Okay, low edge, measured move 55.65, higher edge 56.95, first target 56.71 on the upside. On the downside, I think that's 56.08 to 55.94, which is the 50% range of this gigantic move that we had yesterday. Let's go to the NQ, the E-mini NASDAQ 100. This is a much cleaner trade to see in terms of, whoa, what just happened? Accumulation of inventory, distribution at a discount. What did that do? Shook everybody out that had weak hands. For those of us watching these areas of opening range highs and lows, we can see that we came into a range, didn't get down to it, and then immediately turned around. This also happened to be news on the downside and then a reversal of other news on the upside. If we were to build a Fibonacci and get that 50% range, it would be somewhere around the implied volatility move of today, low end 19,606, high end 20,060. That's not really that far away at this juncture, right? The open way down here at 834, and volatility only had 226 points jammed into it today for the entire day's range of motion, total high to low. So I suspect there's probably going to be more volatility than that, so I would say we overshoot the first target if we happen to hold above 19,930. If, per happenstance, you want to take this trade long, I would see how well it does in the opening range first, because overnight inventory is long, and we should have an inventory correction coming down into the edge of support. Ideally, under this formation, I would love to see a return to 19,604 or thereabouts, And that might easily make a very pretty short trade if we can double top at around the 20,060 area, right? Just wait for it and pay attention to the ranges. They've been working beautifully, right? So that's what we're looking at there. This is truly my question. Is today consolidation or continuation? I don't know. But as soon as the chart tells me, I'm going to trade it. Right now, it's suggesting continuation. And here's the thing, folks. There are a lot of people short this market. If, per happenstance, it breaks through this first implied volatility move, it could easily move 500 points more to the upside without a blink. So you want to be super careful trying to pick a top here. Trade with the trend, dips or buy zones, and only after a failed retest of resistance and a break of support can we look for continuation downside. I was very surprised by the YM. It went straight into its volatility targets, right? Take a look at look at how far away this is. The implied vol move 80 days ago, we could have sold the living daylights out of that option, right? Now, only 60 days, it's moved in maybe 100 points, right? But the implied vol move still has the grind up. This is very clean chart. Dips or buy zones, right? It didn't even break. It came right down into the last implied vol move that we had measured here. What's going on today? Pullbacks or buy zones. Where's the ideal pullback? The hold of the low of the opening range at 40,820, right? That is what the Dow Futures are telling us, with the upper targets up around 41,300. Now, let's say we do have consolidation. Ideally, I would love to see 40,700 to 40,560 as my base target, comes into the congestion mode and then holds for a higher low. That's going to give me a great trade to the north that's got trend. I'm not really sure the markets are going to be patient enough to do that. I see shorts running for the hills today if they don't stop the upward climb. It could be quite interesting today, even in front of the unemployment numbers, which indeed might give the Fed impetus to move. Let's take a look at micro Bitcoin. Trying to hurry along here. Okay, this chart, look at the opening range for the last several days. All right, opening range here. This is the baseline, right? For micro Bitcoin, this range, same almost, or certainly sitting inside of this range, which is right in line of this range, which is right in line of this range. The range has been holding very steadily. We knew a break was coming here. I had no idea the direction, but holy cow, the market told us yesterday it's up, right? Look at this trend. Wow, what is going on? My mouse must need charging. Okay, so look at this move, right? Trend break here. Monster move. This is already at the 2-day implied vol. Let me see what the 3-day is right now, just for grins. 3 days is another 800 points to the upside, so that gives us 98. Let's clone it. Right, and let me make that a 3-day. We'll see if it gets there, right? Could be topping, because it's right. I mean, this whole trade is done. This entire trade is done. Just a monstrosity of a move right there. But in the grand scheme of things, it still looks like a megaphone. So would not be surprised if we see consolidation or very tight price action overall in the market. Anything can happen, of course. All right, let's take a look at oil. As I mentioned, oil in a death spiral. The administration wants lower oil. They're going to get it. They're going to do whatever it takes to get it, right? So why? Because that's going to bring down inflation. Cheaper fuel, energy runs the backbone of every business. So how can I get energy at the cheapest price? Okay, so here's what we're looking at. In the overnight, it went into, sorry. I've got these in the wrong place. This one is 56. We'll leave that around 67. I think actually it's a little bit less than that, but I can't remember. We came into the implied volatility move in the overnight, and now we're bouncing. Should that shock you? No. It should not shock you, because that's what happens at IV motion. Okay? So what's the chart likely to do? Well, what did it do the last time it went into an IV? Okay? Tried to recover over this very steep line. Guess what? It could wick all the way back to 58.16. That $58, that's where I like the short. Momentum, look at this, hugging the bottom. Every spike, a place to sell. Now, could it be that this is the first spike that holds? Yes, but if it holds, it's first going to break 58, pull back, and make a higher low, right? So my thought is, if it pulls back right here and makes the higher low before getting to the edge of the range, then potentially you could take a long. Otherwise, not a good plan, okay? Oil is a short. Oil is a short on the bounces. Doesn't mean you short the lows. That's why I got these pictures up here. Watch the IV move. I think oil's going lower. Also, as you know, gold's going lower, right? As mentioned in times past, ad nauseum. Gold had a blow off top, I don't know, 2 weeks ago, right? And now it's coming in. The gold bugs are going to get smushed if they don't pay attention to what's going on in the grand scheme of price. Okay? Look what it just did. What is this? Inventory accumulation. Right? Here, inventory accumulation, distribution. Continued distribution. And then back into accumulation. Guess what? Breaking out to the downside. Already well past implied volatility moves. From up here, bounces are sell zones. They are selling zones. So you've got to be careful. Okay? Got to be really careful. 2-day move puts us at 31. Folks, I think we're going back here, right? Look at this great big picture. What does this look like? A retracement of this area all the way into 3,000. I think really 29.27 is where I am looking. Not surprising. Would not be surprising. Will it go there in a straight line? Probably not. But be careful. If you want to trade this long, you've got to wait for a bottoming formation. And because the trend of the 50 is down, you have to take it into resistance. All right, this mouse is making me crazy. Let's go to SPY. I'll plug it up later. Okay. Here we are with SPY. My goodness, I am so sorry I'm so late today. Big spike down. I guess that was jobless claims. And then brought it right back up into, what do you know? Opening range again. It's just sitting dead in the middle. That's why I think today might be a crap day to trade, right? Use your practice account. Mechanically, you're going to be able to figure out, what's going on. Oh, geez, that's wrong. Okay, so sideways motion. Look what it came into. You can't make this stuff up. It's fantastic. 554, measured move to the downside, buying pressure event. Upside pressure all the way at 565.50. You notice I've got the target at 564.30, only because I suspect we have consolidation today, but pay attention. If trend is up, then, you trade with trend. And trend says dips or buy zones. For SPY, top end 565, bottom end 554. Here are the cues. You can see all the noisy price action, right? Congestion, that's the same as accumulation. And then distribution. Here we are, moving up. This one looks pretty good. It broke the implied vol move and came down into the breakout area. Immediately recovered that move. That's the area where we can go, I could probably buy that. And then here we are, going to the top of the opening range. We've got 488 and Whoops. What is that? Give that right there. We've got 488 and then 496 on the upside. My target there is 491, but again, I think we move sideways today. I'd be very careful. I'd be very careful today. Wait for the dips. Wait for the dips. All right. Hey, listen, that's it for me, folks. I'm really sorry that I'm late, and I will see you guys on the streams.